The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. 9:06 a.m., about 24 minutes to go until the start of trading. But boy, last night we had some volatility in both directions, man. You look at the accelerations we had. Lows overnight, just below 39.75. You charge higher until about 7:20 a.m. Eastern time this morning, just over 4,000. You see the volatility just in the last half hour or so. We were above 4,000 in the 8 o'clock hour. We made it to 39.90. Right now, we're positive by 4 points. You get all the markets positive, but barely in the green. NASDAQ 100. You talk about some volatility, more than 100 points to the downside, to the upside. We're trading right now up by 5 points. So you think where we are, right? We're up by 5 points. You're getting 100-point moves in either direction overnight in the NASDAQ 100 right now. We got the Dow up 44 points. You look at that drop off in the Dow, man. What was that? From 33,200 yesterday, you're down 300-plus points. At one point, you make it to a low of 400 points, basically, from where we were yesterday. Where did we kick things off? Positive by 40 points in the Dow and positive by 1 point on the Russell right now at 1,900 on the dot. Crude catching a bit, 77.67. The price of crude climbing higher this morning. We got the gold contract down by $3, catching a little bit of a bid in the last half hour or so, with gold climbing from 18.14 to 18.21. Still negative by $3 technically on the session on gold. And remember, though, that gold contract, when it says on the session, right, what time's the gold contract end? Maybe anybody, is it 1:30? I believe that contract resets. So when you get into the futures contracts of commodities, folks, be aware, if you are not, that it's not a 4 o'clock to 4 o'clock deal as many equities are. I believe the gold contract futures, it's 1:30 or 2:30. I believe it's 1:30, 2:30, maybe it's 2:30. Crude, similar in that way as well, but nonetheless, check out the acceleration. Lows last night at 3 in the morning, 18.10. Right now we're at 18.21. Notes and bonds, a little bit of lower price, higher yield. The 10-year right now, negative by about 5 ticks. You got the 30-year, negative by 16 ticks right now. And we jump over to the VIX, volatility index, 2094. The low yesterday, about 2068. Let's see how the dollar's trading this morning. Jump over to the dollar index. We're getting a lower dollar, 104.46 right now. Far cry from where we were early yesterday. You kicked off the trading day at about 105 and change. That helping out the markets for sure. But we'll see where it goes today. Volatility persisting, to say the least. All right, where are we going to kick things off? Let's kick it off with Target. Target had their numbers. One of the few stocks left with their earnings this go-around, and looks like they're up by about $1. You talk about some volatility, man. Now, the conference call just beginning as I came on the air, so Target catching a little bit of a bid. Not sure anything's been said in the last couple hours, but nonetheless, you see the volatility. A quick spike down to 157.80. I think that spike has to do with the forecasted earnings. Then you run to 176.88. Not sure what that had to do, and just like that, from 6:30, you're out with the numbers. By 8 o'clock, you're back to flat. And in between, you had almost a 20-point range on a $168 stock. Now, the expected move in Target, either direction, $12.61. Well, you almost got it in each direction pretty instantly. Down, up, and just like that, we're almost flat. Getting into those target numbers. So what I talked about on the earnings, a couple things to mention here. Target said it expects full-year earnings per share between $7.75 and $8.75. Market was looking for $9.23. Okay, that was probably the reason why you got a little bit of a spike down right away. Forecasted earnings plummeting, that's usually something that's pretty worrisome, all right? It expects comp sales. Stores open at least 13 months and online will range from a low single-digit decline to a low single-digit increase for fiscal 2023. That is a huge swing of an area they're giving themselves there, right? Think about it. Low single digits could be negative 4% decline to a positive 4% decline, which would be an 8% window you're giving yourself. There's a lot of uncertainty in those numbers, folks. Now, if they can get away with it, more power to them, man, right? If you can get away with it, why not? If the market doesn't punish you for that type of lack of guidance, as in you're giving yourself room to low single-digit decline to low single-digit increase, A lot of uncertainty, though, to say the least. They topped the expectations for the first time in a year. Holiday quarter sales rose roughly 1% from the same period a year earlier. Still, margins shrinking. Conservative full-year outlook. Customers are tossing fewer discretionary items into their shopping carts. Per share, $1.89 versus $1.40, but you saw it. Next fiscal year, man, they're going to miss big time. Revenue beats by 31.4 versus 30.72. Yeah. We'll see how this trades today, man, because that's the big worry, right? Earnings. It's all about earnings the next year. That's the whole conversation right now. I mean, we know the Fed's on quite a cycle right now. Pretty interesting that they guide down on the earnings sector, and you get a pop to 167.50. We take a look at Target a little bit longer term. Now, this stock paid the price last year, man. I mean, that was the drop-off, right? Almost a year ago, 9 months ago. On their May earnings, you dropped to this area, and you've been consolidating for a period of about 9 months. Looks like we're going to be right where we are when we open. And, yeah, you talk about an acceleration. Now, let's back it up even a little bit further. There's your 5-year weekly. We go to the COVID lows of March of 2020. And on Target shares, yeah, I mean, you could make the case that you're oscillating right around that 618 of the entire pullback from, $90 about to the run-up of almost 270. And just like that, we're chopping around to about 165 on Target. Let's jump over to Walmart, see how they're trading this morning. Walmart, now they're already out with their numbers, last week, right? Some tough numbers for Walmart as well. But remember that Walmart, I remember talking to our man Kevin Hincks. We're going to ask him coming up after the break because it was interesting how you had Walmart shares. Tough numbers, market opens, it accelerates higher. And if you recall, that was actually a pretty tough day in the market last Tuesday. So Walmart, almost in similar fashion, right? Some tough numbers, but nonetheless, the market likes that they can, I guess, get value in Walmart and Target. You see a little bit of volatility on the Target numbers as well this morning for Walmart, but nonetheless, we're basically flat so far for Walmart shares. All right, what else we have? Data this morning. Home price gains weakened sharply to end 2022. Surprise, surprise. Home prices in December, 5.8% higher than the previous December. That's down from a 7.6% annual gain in November. Prices are now 4.4% below their June peak. You think about the run-up we had in many houses, folks, and I know I'm probably skewed a bit in terms of my perception of things because in Florida, man, Tampa, St. Petersburg, where my dad's locked it down, Miami, of course, right? Different areas, the run-up has been like 100% over 3 years or something silly. So a 4% pullback from the June highs. Not too surprising, and it is interesting to see where this is going to go, man. There are so many dynamics in terms of where this market goes. I was talking to my dad this weekend, and he was just talking about how he has houses built. Is he going to sell them? Is he going to rent them? The ability to replicate what he has. So you're going to sell a property for $1 million if you can't even build that thing almost at $1 million. If you got to go out and you got to buy the land, you got to pay the labor, you got to pay all your contractors, all those costs are going up. That's going to put some type of a floor in the market when the cost to build is going up. The other thing that's in that thing, that market, is just the fact that, man, it is so tough to think about who is going to be selling. When if you sell a mortgage at 3.5%, man, you can't get that back. You can't just go and buy another house at 3.5%. That's going to be a constant dampering on that market. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. Be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps rolling over just a bit, with the S&Ps now flat, 39.87. The NASDAQ 100 sneaks into the red right now, negative by 16 points. The Dow barely positive. Russell barely in the red. To talk about it this morning, let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here from the TD Ameritrade Network on Tiger TV. Fast Market with your host, Kevin Hincks. Tom White. If you haven't checked out the program, folks, check it out at 12 o'clock every trading day right here. Absolutely great education. They walk you through 3 hypothetical trade setups. They're talking about options. And Kevin, it's always interesting when we talk to you on Tuesday, man, because we haven't talked to you from Thursday. And boy, we've had quite a market from those Friday numbers, et cetera. We're sitting near 4,000. Good morning, Kevin.
Good morning, Tommy. A lot going on, that's for sure, Tommy. And some shaky markets that are attempting to stabilize here, but sometimes the market and the overall data just doesn't let you, Tommy. So, I think, I think first and foremost, I think yesterday we had probably the number one data point of the week, and that was durable goods. That showed a big drop, 4.5% in the durable goods orders, that a lot of people thought pretty positive for the overall economy in terms of inflation. But if you look in the data, it really wasn't, Tommy, because ex-transportation, it was much higher than expected. We were up significantly a month ago in durable goods because of the big Boeing order from United Airlines. And that made last month's durable goods order jump to 5.6%. Well, now it came in at 4.5%. But if you look at the smoother numbers, ex-transportation, core capital goods, they both came in much stronger than expected. And so I think some parts of the market kind of missed that yesterday, that number was a little stronger than the overall market wanted it to be, even though the market kind of shrugged it off because of that big, shiny headline number of down 4.5%. So today we're getting some house price numbers that are showing big year-over-year declines. We had a little more trade deficit than expected because of more exports. So all things considered, Tommy, earnings this morning, pretty interesting. Nice relief for but it's not, good news on inventories from Target, not great news on margins for Target. So a kind of a mixed bag there, Tommy, but still a lot going on in the market today.
Yeah, Target, so much to talk about, and I appreciate the breakdown of the durable goods. Some of those details got lost on me yesterday, man. I appreciate how you dig into those numbers. That's why you should check out the program, folks. And yeah, Target, talk about a little volatility right on those numbers being released. We're almost basically back to flat right now. And pretty interesting that they miss on earnings on the forecast for the next year pretty decently on a miss. That seems to be a lot of the worry, and it's holding up relatively well. But we'll see where the market goes, of course, in 8.5 minutes, Kevin. I want to jump back to Friday's number for the PCE, because that, of course, a big one for the market. We had some negative action in the market down to 39.47. I was talking about yesterday, Kevin. We didn't talk to you, but I was surprised that the market, even with the numbers you talked about yesterday, got back above 4,000, almost got back to where we were at the end of Thursday's action, before you got all that sell-off. What did you think of even Friday's action, tying in that number, and then kind of erasing it yesterday on a pretty important PCE hot number, along with all the other data we're getting?
Yeah, in terms of inflation, there's no good spin you can put on that number that we got on Friday. The PCE data, all it showed, and you saw that today in the France, Spanish, and Japanese CPI. Inflation is reigniting, and the overall target numbers for Fed funds rate are all going higher, Tommy, and that's problematic. So yet the market was down on Friday, but fairly resilient in terms of Friday. So interesting how the market's hanging in there despite data that was overwhelmingly showing a reignition of inflation.
Boy, so we had reigniting and reignition in that statement. If we start hearing the word reignition and reigniting, Kevin, watch out for this market. And I agree, man, because that's, these numbers in the last press conference from Chairman Powell, it's interesting. We're already coming up a few weeks away, potentially from not potentially, but from the next one. When he said, and maybe it was one of his next speaking events, the disinflation process has begun. I said, oh, man, well, that's cool. I mean, I'm excited. I don't know how that's going to play out in the market. And we're seeing that maybe he might be Biden. What do you think? You think the chairman's happy that he had those words right now with all the data that came out, Kevin?
Well,
the $1 million question.
It's important because a lot of people like to take something that Jerome Powell says and hold it to him 6 months later. You realize that Jerome Powell used the word transient, right, or transitory in March of 2021. And people still hold that against him for using that back then. When think of all the things that changed since March of 2021, like the war in Ukraine, like $1.8 billion in spending. When Jerome Powell looks at a snapshot of the economic data and makes a comment. Why? Because he has to. He has to make comments, and he has to be transparent. The Fed is more transparent now than ever in the history of the Fed, and all they do for that transparency is beat up Jerome Powell for it. I think it's ill-suited, and I think Jerome Powell deserves better than that, frankly.
Boy, it's a tough job, especially with what's going on right now. But I bet that he's not. I don't think the market would like. Let's put it. If we get disinflation, then we get inflation, then we get disinflation. Right, boy, watch out, man, if that starts coming in. But we'll see. We got the best part is we get to do it every month, Kevin. We get to do it every week. We got data coming down the line. It's the last day of February. We're going to start getting February data before we know it. And with that in mind, man, what are you guys talking about on Fast Market coming up at 12 today, Kevin?
Earnings place today, Tommy, in Lowe's, in Dollar Tree. Like Foley will do their presentation on Monster Beverage that has earnings coming out. So 3 good earnings plays. Caroline Woods will be on the show. Like Folio, a really good lineup today covering a bunch of retail, in terms of Lowe's, retail in terms of Dollar Tree, and then some beverage drinks, Tommy.
And pretty remarkable. I jumped through those charts on the Thinkorswim platform, as you're saying them. Lowe's, of course, pulling back last year. The housing market taking a little bit of a hit. But you jumped to Dollar Tree, man. Strong year. Last year, some volatility, but compared to the market, finishing higher. And this year, holding up well as well at 143. And Monster, same deal, man. Decent year last year for them as well. Well, Kevin, we appreciate the time on a volatile, busy morning as always. We'll be watching at 12 o'clock today, and we look forward to talking to you tomorrow, man. Yep, got him. Maybe we lost him. Up. All right. He's probably running because he's got 3.5 minutes, folks, to the opening bell. But check them out every trading day, 12 up. You're breaking up a little bit, Kevin. All right, we'll let them go. Folks, check it out. Fast Market every day, 12 o'clock from the TD Ameritrade Network. We're very fortunate to have them as a sponsor, as a partner. We air it every day at 12 o'clock. I've learned so much myself from watching Kevin, Tom, the whole team over there at TD Ameritrade. They have some outstanding guests. They break down the action. Check it out, man. And they're talking about 3 stocks. And yeah, let's take a look. Lowe's. So it's interesting how you always get Home Depot, Walmart, right? And then you get Lowe's and Target. It's like the second tier sister companies reporting their numbers following the other ones. You jump to Home Depot, okay? Home Depot out with their numbers last week at the same time that Walmart was out with their numbers, trading lower. You jump to Lowe's chart. Lowe's, you see the action on the Home Depot numbers. We come into their earnings as well at about 2:04. Stay tuned, folks. We're coming back for that opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks, and we got the S&P down 4 points right now, trading 39.83, and yeah, we're negative by 4, but you're talking about 20 points below where we were at about 7:15 this morning. And where did we roll over? Rolled over right where we were at about 2:15 yesterday before this market kind of accelerated a bit into the close. Interesting to see where today goes. NASDAQ 100. You're off almost 90 points from that high. We're going to be approaching the pre-market session lows across the board. You got the S&Ps, that price level you're talking about 39.75 on the S&Ps. Jumping back to talk a little bit of home prices, okay? So we're mentioning home prices in December, 5.8% higher than the previous December, but that's down from 7.6% annualized in November. But I talked about that I have a skewed data point being in Florida, and you check it out, man. Cities still seeing the biggest price gains, okay? Now, this is up year over year. December versus November, I believe. Is that what we're looking at here? Let's get this. Yes. So home prices were up 5% in December, up 5.8% higher. I mean, you see the lag. It's about to be March tomorrow. And we're talking about December data that includes December 1st transactions. And it's about to be March 1st. Nonetheless, okay, home prices in December, 5.8% higher. And that follows a 7.6%. We're going to be dealing with some comps, man, because we're coming down right now on a monthly basis. The annual increase for the 10-city comp, which includes New York and LA, was 4.4% in December, down from 6.3%, okay, versus the S&P Core National Index versus the 10. Cities still seeing the biggest price gains, Miami, Tampa, and Atlanta, 15.9, 13.9, and 10.4. I mean, I just told you that the 10-city comp's at 4.4, and you got Tampa at 13.9. Now, all 20 cities reported lower prices in the year ending December 22 versus the year ending November 2022. So even though we're up, check that out, right? 13.9% year over year. In December for Tampa, all 20 cities reported lower prices in December versus November. So the prices actually went down from November to December, and meanwhile, we're still up 14% December to December. Pretty interesting where that goes. As we know, mortgage rates going up. Saw a little bit of a dip in February. That caused maybe potentially some action in the real estate market. It'll be interesting to see where March goes, as some of the forecasts have to do with higher rates, maybe dampening demand just a bit in that market. All right, what else are we going to talk about? Let's see. Treasury prices, of course, rise slightly to close out the bumper month for yields. And boy, it's been a banger month, man. The 2-year, 4.828. The 2-year yesterday, you're talking about highs that we hadn't seen since 2007. Tomorrow kicks off a new month. We'll see where we go. New TikTok ban is poised to advance in Congress, and it should, folks. Okay? You think about, we got kids in my household, man. Social media is bad enough. But there's no way that we should have China controlling all the data of everybody using everything, controlling everything within their app. It just doesn't make sense, man. You know, with everything going on, it just doesn't make sense. And I know private business, public business, all of that stuff, it's a straight out national security risk. And I don't even know much, man. And I can just put 2 and 2 together. There's no way that we should be allowing all our kids to be on an app controlled by the Chinese government. And that's basically what's going on. A bill to revise legal protections that have shielded TikTok from U.S. sanctions is expected to pass a key House committee on Tuesday, paving the way for a broader ban on the popular short video app. Now, let's see how Facebook's trading on that. Meta. Zuckerberg. Up 1.9%. There you go. Maybe that has to do with it, does it? I'm sure it does. Yeah, they would love for their best competitor, TikTok, to get kicked off the block. If anybody else owned it, they'd be in trouble. But guess what? The Chinese own it, man, and that's a different deal, to put it lightly. Yeah, so the bill would likely pass. Its fate in the Democratic majority Senate's unclear. Well, I hope they get it done, man. Period. End of sentence. No matter what you line up with. You know, I don't understand how that one gets somewhat political as well. Then you jump to interesting stuff going on in the Supreme Court. Everything gets politicized these days. This one, it doesn't make sense that it doesn't have to do with the market, folks, but you got to use your brain sometimes. And you want to make sure that people on both sides, okay, unfortunately, many times these days, there's so many people that defend each side, whatever side they're on, regardless of the argument. It's very tough to not be biased, right, and to just immediately flock to whether you lean right, lean left, you flock to that deal. Democrats and student debt. It is a massive problem, okay? Massive. It's hampering a generation of people in this country, period. End of sentence. That one's almost a hardcore fact that is very difficult to refute, okay? But using powers of somewhat like a COVID emergency, right? You cancel $10,000 of debt. You want to make sure that you align, because that's my greatest issue with this. Because democracy, folks, is about, this is where, all the voting rage, man, these stories coming out, Rupert Murdoch out there saying, oh my goodness, yeah, the Fox executives, the Fox analysts, I guess they were, pushing around some stories that they knew were false, right? All this stuff, okay? Votes matter, man, okay? And the bummer of this deal is that if Congress passes something like that, then it's done. That's the will of the people, okay? And you have to respect it, whether you like it or not. When you just allow executive outreach, now listen, the same deal, all right? When Trump sent out all those payments just by himself, there's no way that flies. It just didn't get challenged because he had the political will, and Democrats weren't going to challenge it because he was sending everybody free money. No way that flies that a president can just send everybody a bunch of free money by himself for signing off. Okay, Democrat, Republican, not sure how that just played out, but that's politics. This one, okay, there's no way a president should just be able to cancel $10,000 of debt for every single person that has it just because they say COVID created a national emergency. Now, it's going to be interesting to see which way this goes, okay? One of the biggest parts they talking about this, a journal piece, is standing, okay? And do the people challenging the Biden administration have standing to go in front of the court? And standing front and center, a lot of analysts think that may be the administration's best hope for prevailing. It's pretty lame, right? The best hope for prevailing is that the people challenging you don't have a right to challenge you, because if they do have a right to challenge you, it probably will get overturned, is what's kind of inferred in there. We'll see if it plays out. But the other part of that, folks, that goes into the conversation as well, okay, and we're deviating, it's important to think about all this stuff, man. I'm somebody that was in college, okay? I had debt. I paid off that debt. That's not even the gripe I have with it, the gripe. The gripe is that there are many, many people who took out way too much money, $100,000, $150,000, $200,000 for an education that is not providing them a job that can pay back that education, okay? $10,000 of helping is not going to pull those people out. If you have $10,000 or less in debt and you have been to a higher education beyond high school, you probably have the ability to pay that off. It's probably not the sole thing that's destroying your life and your ability to rise up. It's the most educated members of society that are receiving that. And man, there's probably got to be a better way to spend that money to lift up the people that need it most, if that's your argument, beyond the people in higher education, because it's just pushed out to everybody. And man, people with degrees, with debt, you talk about, Clarence Thomas, I was reading, he had college loans when he became a Supreme Court justice in 1991. He would have qualified. Stay tuned, folks. I'll be right back to talk some markets. We'll take a look at some of the equities moving this morning.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have Meta up by 2.3% right now. Looks like TikTok may be in trouble, man. S&Ps may be in trouble as well. We dipped below 39.80. We almost touched the lows we had pre-market. From there, you catch a little bit of a bid. We're back to 39.84, barely in the red for the markets right now across the board with the Russell actually positive by 8 points, up 0.4%. We jump to the dollar index right now. Dollar index, 104.64. We jump to some of the other companies. Zoom is zooming both ways this morning, up by 2% right now. You spiked to 80, you're back to 75. They had their numbers after the bell last night. Zoom shares jump on better than expected fourth quarter results, a rosy earnings outlook for the new fiscal year. Far cry from Target, but man, they're giving that up pretty quickly on the open. Earnings and revenue topped estimates for the fourth quarter, $1.22 versus 81 cents, and they beat by barely $1.12 billion versus 1.1. Revenue increasing 4% year over year in the quarter, which ended January 31st. Yeah, a dramatic slowdown, but that's already been factored into the charts. First net loss since 2018 in the quarter, losing $104 million compared with a net income of $491 million a year ago. The loss stems from stock-based compensation. So I say, right, how's that happen when you're making $1.22 a share adjusted, but you're actually losing money? Stock-based compensation, dishing it out. Growth will continue to slow. 1.1% growth. How about that? And market was looking for about $4.6 billion. They're now going to come in at about 4.44 is kind of the number. So just under that. Adjusted earnings per share, 411 versus 418 though, topping the 366 average estimate. Pretty interesting, right? In terms of they're forecasting lower revenue and higher earnings. But this stock, man, watch out. Just chopping around, let alone you got to go way back to get to the highs of 588 in October of 2020. And yeah, you were at a price point of $94 about a year ago. Now you're at $74. You were just at 63 to kick off the year. Hey, if they're making money, that's a change in action. And, you know, one of the things that does happen is, see if this, yeah, this is it. You know, you start getting into this company, their PE is still at about 35, okay? They just said they're going to grow at 1.1%. It's a strong company. They make money, but boy, they're at a stage where how many companies are only growing at 1.1%? And meanwhile, they're losing money because of stock compensation, right? When does that happen, man? Zoom's up 8% for the year. Nonetheless, they're a little bit higher today, but boy, we'll see if it holds. As now you're only up 1.1%. Watch out, man. We got volatility everywhere in this market. NASDAQ catching a bid. You're at 12,106. What else we got with numbers? Was it Dish? Dish is out with their numbers, I believe. No? What do they get? Double downgrade or something? I had them up here on the stocks that were moving. Yeah, double downgrade from Bank of America. That was it. What else do we have? Norwegian. Yeah, let's take a look at the cruise ships. So Norwegian's down to 15.15. Their numbers, wider than expected loss, loss 104 a share, 1.52 billion of revenue. Analysts were expecting a loss of only 86 cents on pretty similar revenue, so they're losing more money than the market thought. Earnings guidance also came in below expectations. Boy, you take a look at this thing, right? Now, if you're looking at the channels, a pretty decisive break out of this channel to kick off the year, man. And boy, if you caught it, you caught a 50% run up to 18, but just like that, we're back to 15, 18. You're off by 8% today. I don't know when cruising gets back, man. It'll be around, but these companies got a lot of debt. And boy, even if COVID's over, I don't want to get trapped on a cruise ship with COVID blowing up or anything like that, man, because that's just not going to be a fun cruise ship. There's no reason. And we've seen how they can turn into kind of that cesspool. Flip side of that, you want to go for it? There's some phenomenal deals, I think, on cruise ships right now. I don't know. That's a tough one. Yeah, let's see. Dick's, they get a downgrade. DKS? Yeah. But this stock's had quite a run from the lows of last year. This is a 5-year weekly. And look at it, folks. The COVID run from 1346 to 147. Where does this thing jump back to? Literally pegs the 618 to like the tick, man, before this thing jams higher to 128 right now. Absolutely remarkable how those Fibonacci's work sometimes, folks. And that's going to be a perfect segue to a week from tomorrow. Tomorrow's March 1st. A week from tomorrow, our man Larry Pesavento is doing a live trading webinar, folks. 5 hours, $295. It comes with a month of his newsletter, which is almost $100 value. That's $97 a month. So really, you're getting the webinar for under $200. It's 5 hours. It'll be archived. We got a bunch of attendees already signed up. It should be a good crowd. And yeah, please check it out. Larry does about a couple of them of the year. I got to look last one he did. Last one he did, I think, is September. So this is going to be March, I believe. You can check it out, okay? He's going to be talking about how he trades the market, how to use A to B, C to Ds to build an expectation for the next sequence of moves, how to use ABCDs as a risk management, the 3 patterns that help identify shifts in supply and demand when he's not talking about that A to B, C to D, what most traders do when a pattern fails, okay? A trend change pattern. I mean, you can go through this. Please check it out on the front page, folks. He's going to be teaching you while he's trading 5 hours, and Larry usually does not trade for the final 2 hours of the day, so it just works out well. 9 o'clock till 2. It'll be within our Discord server. If you're in the Tiger's Den, it's as easy as clicking a button. If you're not, we'll get you in there in plenty of time. And when you sign up, you instantly gain the access to the newsletter. So don't delay. Sign up. You get the newsletter, and everybody gets the newsletter until at least about April 8th, a full month. And if you're already subscribed to Fibonacci 24/7, you're already paying for the newsletter. You get that for free. Your next payment is skipped automatically. So please check it out a week from tomorrow. And if you haven't followed Larry, folks, Fibonacci's, I'd advise you to get into them because I enjoy them. And there's something about the way they work and whatever it is in our system, man, they are pervasive through life, and the markets is life. And that's how it goes, man. S&P is negative by 2 right now as we chop around at about 39.85. All right, what else do we have pulled up? Talked about Zoom. Yeah, Dish. So they got a double downgrade on Dish. That's a pro one. Okay. But I was reading that one earlier in another article, website. Top TikTok, home prices, yields. Yeah, politics are going to be heating up, man. Absolutely amazing that you look at, we're at about a year and a half out from the presidential election, let alone primaries, right? So DeSantis, his book, number 1, as it goes on sale. Now, any politician that has any money to their name, usually they can just have their PACs, whatever, buy their book. And this is on both sides, so that really doesn't speak much. But boy, I have a feeling this one's going to heat up, and we'll see where it falls. Unfortunate that it's not going to heat up on the Democratic side, too. Because if anything, man, the age of these two guys, Trump and Biden, what is going on, man? How old is... They're both getting up there. I mean, I think Biden wouldn't be in office until he's 86 or something like that. Shouldn't be happening, all right? Nonetheless, each side seems like they're stuck with it. We'll see if DeSantis gets through. I'm pretty sure he's going to go for it. He's got the wind of Florida at his back, whether you like that or not. That's the reality of it. And, yeah, we'll see if it happens, man. But it's gearing up right now. He's got the book. He's going on the tour. And we're in a year and a half out from the general election, let alone as things heat up into the primaries. All right, talking a little bit of work, okay? We're going to tease this. We'll come back after the break. Americans work from home. Europeans and Asians head back to the office. Interesting in this article. One of the things they talk about here, return to office, Paris and Tokyo, about 75%. U.S. at about 50%. One of the areas that may be contributing, size of our homes, man. We got big houses in the U.S. We got rooms so that we can work from home. 2+ is the number in the U.S. Japan, Germany, France. Everybody else, They got less than 2 rooms in the average home. Can't do it, man. Interesting to see how that changes things going forward. We'll talk a little bit more. Stay tuned, folks. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got a two-way market going on, at least intraday in these markets. You can definitely trade them both ways with the moves we're getting. You get the S&Ps now flat. We're about 12 points off the lows we were at just at the open of 39.87 right now is where we're at. NASDAQ 100 barely in the green. You get the Dow trading lower, off by 115 points right now. Russell positive by 10. We jump over to target shares, catching a little bit of a lift, even on declining profitability and margins, man, over the next year. Nonetheless, target up by 3% right now. Walmart, basically flat. Jump to some of the FANG stocks. Amazon shares down 0.3%. We jump over to Apple, down about 0.2%. Microsoft down about 0.3% right now. We jump over to Tesla. Tesla shares trade up to 212, and just like that, you're back to 207. Elon, the richest man in the world. Yet again, I was seeing headlines yesterday having to do with, of course, the run-up that Tesla shares have had. Pretty dramatic run. Can't deny the fact that things up 100% to kick off the year. But boy, you're still well off some of the numbers that you were at, and you're only back to where you were in November of last year is another way to put that. Jumping back to that article, in terms of habits, the U.S. versus Europe and Asia, the number of people working from home. So I talked about in terms of homes, right? Now, they talk about in here, one of the things in many countries, especially in Asia, You have multiple generations, right, living in the same house, making it particularly difficult for people to work from home, etc. And what they also get into it in here, this is where they talk about in terms of the home offices, but you're talking about suburban sprawl, talking about many Americans live longer, more tedious commutes. You look at the average one-way commute time by metro area minutes. New York, Chicago, and LA, all at the top of that list. Then you get down to Paris, Madrid, but it probably circles out from there. When you're just talking about businesses, you just talk about Boston, the people living around Boston, where I'm familiar from, my hometown, right? And you get Europe and Asia that have high-density cities with effective public transport. That's the London-based director talking about that. So that's part of it as well. The other part going on is the strength of our economy, man. 3.4% unemployment rate. Europe, 6.1%. Yeah, so guess what? Workers, they got more sway when you got an unemployment rate of 3.4%. Watch out, folks. We got two-way market. Thanks for starting your trading day with me. Basil Chapman, he's coming up next at 10 o'clock. Don't forget about Larry's webinar, folks, coming up a week from tomorrow. We'll see you tomorrow. Stay tuned for Basil. Have a great one, folks.